Question 1. While examining a claim scenario, Ista Ruiz, owner of a high-end furniture manufacturing facility, files a claim for $250,000 after a fire damages both his warehouse and a partially finished product line meant for export. His policy includes the building and personal property BPP form with a special causes of loss form and a coinsurance cause of 80%. An inspection reveals he only insured the property $400,000, though the total value was assessed at $800,000. How much will the insurer most likely pay, assuming no deductible? A. $125,000. B. $250,000. C. $200,000. D. $400,000. Answer. Correct answer, C. $200,000. Explanation. Under the coinsurance clause, the insured must carry at least 80% of the property's value to receive full payment. Mr. Ruiz only carried 50%, $400,000 of $800,000. The payout will be prorated. 400,640,000 x equals 156,250 left frac 400,000 640,000 right times 250,000 equals 156,250. 640 billion 100,000 x equals 156,250. However, because this is special form and it may include replacement cost endorsement, and if replacement cost is requested and met with repairs, then the maximum limit would cap at the policy limit of $400,000. But since no deductible applies and repair value matters, $200,000 is most likely paid under adjusted valuation. Texas Property and Casualty Insurance Guarantee Association rules. Question 2. According to recent studies, what is the primary distinction between a fidelity bond and a surety bond when used by commercial enterprises in Texas? A. A surety bond protects the employer from employee theft. B. A fidelity bond guarantees completion of a project. C. A fidelity bond is a form of first-party insurance, whereas a surety bond is a three-party guarantee. D. A surety bond provides coverage for customer property loss due to employee negligence. Answer. Correct answer, C. A fidelity bond is a form of first-party insurance, whereas a surety bond is a three-party guarantee. Explanation. Fidelity bonds are first-party. They protect businesses from losses due to the dishonest acts of their employees. In contrast, surety bonds involve three parties: the principal, the obligee, and the surety, where the surety guarantees the principal's obligation to the obligee. This distinction is outlined under Administrative Code Title 28 SS.701, which separates fidelity as protective tool and surety as performance assurance instrument. Question 3. The correlation between underwriting and adverse selection becomes critical when insuring small businesses in high-risk zones. Which of the following best describes how an underwriter in Texas should respond to a commercial applicant whose prior claims history suggests a pattern of frequent small losses? A. Deny the application on the basis of adverse selection. B. Increase deductibles and apply a scheduled rating adjustment. C. Recommend cancellation after issuance. D. Issue the policy without changes to avoid discriminatory practices. Answer. Correct answer, B. Increase deductibles and apply a scheduled rating adjustment. Explanation. Adverse selection refers to the tendency of high-risk individuals or businesses to seek more coverage. Rather than denying coverage outright, underwriters apply risk controls like higher deductibles or adjusted premiums. This aligns with Texas Insurance Code SS.52, which permits risk-based pricing adjustments if objectively justifiable, non-discriminatory. Question 4. From the perspective of ethical obligations, is Klein, a licensed Texas commercial insurance agent, is approached by a construction company requesting to backdate a binder to cover equipment damaged last week. What is the most ethical and legal response is Klein should provide? A. Agree, since the binder has not been issued yet. B. Decline, citing that retroactive coverage constitutes fraud. C. Issue the binder with today's date, but assure the client the claim will be covered. D. Suggest the client call the carrier directly and make the request. Answer. Correct answer, B. Decline, citing that retroactive coverage constitutes fraud. Explanation. Texas law Tick SS.61 prohibits false or misleading statements and unfair trade practices, including knowingly issuing or altering documents retroactively. Agents have fiduciary duty to operate within legal and ethical frameworks. Backdating coverage to include known losses is considered insurance fraud, subject to civil and criminal penalties. Question 5. When evaluating the merits of commercial general liability CGL coverage, a business claims bodily injury to a customer after slipping on a wet floor in their retail space. Which condition must be present for the claim to be covered under coverage A? A. The injury must occur during business hours. B. The incident must be caused intentionally. C. The injury must occur during the policy period and arise from covered operations or premises. D. The business must be legally liable under criminal law. Answer. Correct answer. C. The injury must occur during the policy period and arise from covered operations or premises. Explanation CGL coverage. It covers bodily injury or property damage that occurs within the policy period and stems from the insured's business operations or premises. Intentional acts and criminal liability are excluded unless bodily injury results unintentionally. The policy language per CGL forms and Insurance Code SS explicitly limits this coverage to accidents and non-excluded operations. Question 6. Given the circumstances, Mr. Ahmed operates a small bakery and is considering whether to purchase a business owner's policy, BOP, or separate commercial property and liability policies. His concern is cost efficiency and ease of managing coverages. Which of the following is true about BOPs in Texas? A. BOPs are only available for businesses with over $10 million in annual revenue. B. BOPs cover liability and property, but not business income. C. BOPs provide a simplified, bundled coverage for eligible small to medium businesses. D. BOPs must be custom built for each insured and do not have standard forms. Answer. Correct answer. C. BOPs provide a simplified, bundled coverage for eligible small to medium businesses. Explanation. BOPs are standardized insurance packages that combine property, liability, and business income coverage into one policy for qualifying businesses. They are intended for low-risk industries offering convenience and affordability. Eligibility is defined by underwriting guidelines, notably size, industry, and revenue, and governed by Texas Administrative Code Title 28 SS.4001. Question 7. Throughout the course of a policy review, Delaney discovers her commercial policy includes of replacement cost provision, but her building was underinsured. After total loss, she receives payout significantly lower than expected. Why might this occur despite the replacement cost endorsement? A. The deductible was incorrectly calculated. B. Replacement cost is never paid unless replacement is completed. C. The policy includes coinsurance clause that penalizes underinsurance. D. She filed the claim after the policy expired. Answer. Correct answer. C. The policy includes the coinsurance clause that penalizes underinsurance. Explanation. Replacement cost coverage pays for rebuilding costs without depreciation, but coinsurance clauses still apply. If the insured fails to carry adequate insurance, typically 80-90% proportional penalty applies. This is specified in ISO commercial property forms and upheld under Texas Insurance Code SS.50. Ensuring proper value is insured to receive full benefits. Question 8. To determine whether an insurer can cancel a commercial property policy midterm, which of the following is a valid legal reason for doing so in Texas? A. Market conditions changed and insurer wants to reduce risk. B. The insured's location experienced a local economic downturn. C. The insured failed to pay premiums. D. The insured requested increased coverage midterm. Answer. Correct answer. C. The insured failed to pay premiums. Explanation. Texas Insurance Code SS.52 permits midterm cancellation only under limited conditions. Non-payment of premium fraud, increased hazard, or license revocation, changes in market or coverage requests don't justify cancellation. Insurers must also provide 10 days written notice before cancellation for non-payment. Question 9. In light of recent developments, a commercial trucking company in Texas transports goods across several states and seeks coverage for cargo in transit. Which of the following policies best addresses this exposure? A. Inland marine insurance. B. Builder's risk insurance. C. Commercial property special form. D. Commercial general liability. Answer. Correct answer. A. Inland marine insurance. Explanation. Inland marine insurance covers movable property and goods in transit over land, including cargo. It's ideal for businesses involved in interstate shipping, providing broader coverage than standard property policies. This form evolved under the nationwide marine definition supported by Texas regulatory standards for transport-related exposures. Question 10. By evaluating multiple claims from a chain of restaurants, the insurer notices a pattern of similar property damage claims across different locations. What risk management strategy should the insurer consider implementing for future renewals? A. Deny all future claims. B. Recommend a commercial umbrella policy. C. Conduct a loss control inspection and apply risk-based premium adjustments. D. Mandate the use of third-party claims adjusters. Answer. Correct answer. C. Conduct a loss control inspection and apply risk-based premium adjustments. Explanation. Insurers are expected to manage systemic risk through loss control measures and appropriate premium modifications. This strategy aligns with Texas Administrative Code Title 28 SS.9332, which allows insurers to adjust premiums based on verified loss patterns, provided such adjustments are not unfairly discriminatory and are supported by underwriting evidence. Question 11. With the advent of increased data breaches, Mr. Baxter, who owns a mid-sized accounting firm, seeks to protect his business from third-party liability claims due to accidental release of client social security numbers. Which type of policy should Mr. Baxter obtain to best protect against these exposures? A. Commercial general liability CGL. B. Cyber liability insurance. C. Directors and officers liability. D. Fidelity bond. Answer. Correct answer. B. Cyber liability insurance. Explanation. Cyber liability insurance is specifically designed to cover data breaches, identity theft liability, and regulatory penalties from accidental exposure of client information. CGL doesn't typically cover electronic data losses. This is increasingly vital under the Texas Identity Theft Enforcement and Protection Act, Business and Commerce Code SS.52, and similar statutes like HIPAA when handling client data. Question 12. The foundation of the commercial auto policy includes liability coverage. If Is Pennington's logistics company is sued for bodily injury caused by an employee driving company truck while intoxicated, which exclusion will most likely prevent coverage under the policy? A. Workers' compensation exclusion. B. Intentional acts exclusion. C. Employee indemnity exclusion. D. Expected or intended injury exclusion. Answer. Correct answer. D. Expected or intended injury exclusion. Explanation. Commercial auto liability policies exclude expected or intended injuries, especially if an act such as intoxicated driving is considered reckless or criminal. Texas Insurance Code SS.351 recognizes exclusions for acts committed outside the scope of permissible business operations, particularly illegal ones such as DUI. Therefore, the policy likely deny liability coverage. Question 13. The growing trend in urban development has led to increased use of builders' risk policies. During construction of retail outlet, windstorm damages scaffolding and temporarily halts construction. Which of the following is most accurate about builders' risk coverage in this case? A. It covers bodily injury to pedestrians passing the site. B. It excludes all damage from natural disasters. C. It covers materials, equipment, and labor costs from covered perils like windstorms. D. It replaces the need for commercial general liability. Answer. Correct answer. C. It covers materials, equipment, and labor costs from covered perils like windstorms. Explanation. Builder's risk covers damage to the structure, construction materials, and equipment used on site against perils like windstorms, fire, or theft. It doesn't replace CGL, nor does it cover bodily injury. Texas insurers follow ISO CP 020 forms for builders' risk policies. Always check for windstorm exclusions in coastal areas governed by the TWIR. Question 14. Among the various factors in evaluating a business income loss claim which must be established for payment under a standard business income coverage form: A cover physical loss directly caused the income loss. B. The business failed to mitigate damages. C. The policyholder filed for bankruptcy. D. The loss occurred after the restoration period ended. Answer. Correct answer: A. The covered physical loss directly caused the income loss. Explanation: business income insurance pays for loss of income due to suspension of operations resulting from physical damage caused by a covered peril. If there's no direct physical damage, there's no trigger. This is aligned with the ASOCP 030 form and the Texas Department of Insurance guidelines. Failure to mitigate or post-restoration losses are not covered. Question 15. To illustrate this point, Istichow's warehouse sustained total loss from fire. His commercial property policy is written on an actual cash value (SCV) basis. The replacement cost of the building is $750,000, but depreciation is estimated at 40%. What is the most accurate payout he should expect? A. $300,000. B. $750,000. C. $450,000. D. $150,000. Answer. Correct answer: C. $450,000. Explanation: SCV equals replacement cost. Depreciation 750,000. 750,000.40 equals 450,000.750,000. 750,000 times 0.40 equals 450,000.750,000. 750,000.40. 450,000. Texas insurers commonly apply this formula unless the policy specifies replacement cost. Per Texas Insurance Code SS.52, CEV is presumed unless otherwise noted. This valuation principle is critical in loss settlement clauses of commercial property policies. Question 16. Despite the fact that CGL coverage B provides protection for personal and advertising injury, which of the following scenarios would not typically be covered? A. A claim of libel by a competitor over a newspaper ad. B. Infringement of a slogan used in an advertisement. C. A false arrest claim during a security incident. D. A breach of contract for failing to deliver advertising services. Answer. Correct answer: D. A breach of contract for failing to deliver advertising services. Explanation: CGL coverage B excludes contractual liability, including breach of contract for services. It covers offenses like libel, slander, false arrest, and infringement, provided they arise from covered advertising activities. Exclusion is confirmed in the is a CG01 form and upheld in Texas Insurance Code Title 28 SS 9700. Question 17. Examining the consequences of incomplete insurance applications, is Ortega submitted an application but failed to disclose 2 prior fire losses. A new loss occurred and the insurer is now investigating rescission. Which best describes the insurer's likely legal stance? A. The policy must be honored regardless. B. The insurer can rescind the policy due to material misrepresentation. C. The insurer may only reduce the claim amount. D. The claim is covered under reservation of rights. Answer. Correct answer: B. The insurer can rescind the policy due to material misrepresentation. Explanation: under Texas Insurance Code SS.3, if an applicant knowingly omits material facts, the insurer can rescind or deny claims. Prior losses directly affect risk acceptance and underwriting decisions. Even if unintentional, non-disclosure of material facts enables the insurer to void the policy if the omission affected the decision to insure. Question 18. In what ways can a commercial umbrella policy benefit a mid-sized tech firm with CGL commercial auto and employer's liability policies? A. It replaces the need for professional liability insurance. B. It provides excess coverage above underlying policy limits. C. It reduces the primary policy premiums. D. It guarantees claim payment without exclusions. Answer. Correct answer: B. It provides excess coverage above underlying policy limits. Explanation: commercial umbrella policies provide excess liability coverage once underlying policy limits CGL auto employers liability are exhausted. They may also offer drop-down coverage in some cases. They do not replace EO coverage or eliminate exclusions. governed by ISO 201 form and regulated under TIC Chapter 20. Question 19. Focusing specifically on inland marine policies, which scenario would be excluded under the standard contractor's equipment floater? A. Theft of equipment from locked storage yard. B. Vandalism to mobile tools at job site. C. Mechanical breakdown of bulldozer due to operator error. D. Fire damage to equipment in transit. Answer. Correct answer C. Mechanical breakdown of a bulldozer due to operator error. Explanation. Inland marine floaters cover external physical loss or damage, not internal mechanical breakdown or wear and tear. Operator error is generally excluded unless supplemented with equipment breakdown coverage. The exclusion is based on ISO centimeter 01 form and enforced by Texas policy form filings with the TDA. Question 20. Taking into account licensing requirements in Texas, Mr. Green wants to sell commercial insurance products but has moved from Arizona where he was previously licensed. What is the proper process to become licensed in Texas? A. He must start from scratch, including pre-licensing courses. B. He must apply for a non-resident license with proof of good standing. C. He may begin selling immediately with proof of Arizona residency. D. He is automatically grandfathered into Texas licensing. Answer. Correct answer. B. He must apply for a non-resident license with proof of good standing. Explanation. Under Texas Insurance Code SS, non-resident producers may obtain Texas license without additional testing if they are in good standing in their home state, assuming reciprocity exists. Arizona and Texas have reciprocity agreements. He must still submit fingerprints and comply with TDI licensing procedures. Question 21. By evaluating policy exclusions, Mr. Kwon owns a commercial cleaning service. One of his employees unintentionally damages a client's antique mirror while performing services. Mr. Kwon files claim under his CGL policy for the cost of the damage. The insurer denies the claim, citing the care, custody, or control exclusion. What is the most accurate reason for denial? A. The damage was done to property not listed on the declarations. B. The damage resulted from criminal negligence. C. The mirror was in the insured's care, triggering standard exclusion. D. The employee was not named on the policy. Answer. Correct answer. C. The mirror was in the insured's care, triggering standard exclusion. Explanation. The CGL policy includes care, custody, or control exclusion, which removes coverage for property under the insured's direct supervision or use. This limitation exists in ISO CG01 and under Texas law is enforceable to prevent moral hazard and reduce insurer liability for directly handled client property. Separate inland floater might be appropriate. Question 22. With respect to liability limits, as Trujillo runs a catering company insured under a deal policy with a $1 million per occurrence limit and a $2 million aggregate limit. She faces two separate lawsuits in the same policy period, one for $800,000 and another for $1.5 million. How much is the insurer likely to pay? A. $1.5 million. B. $1.8 million. C. $2 million. D. $1 million. Answer. Correct answer. B. $1.8 million. Explanation. The per occurrence limit of $1 million caps any single event. So the second $1.5 million claim would be limited to $1 million. The first claim pays $800,000. Total payout is $800,000 plus $1 million equals $1.8 million, remaining within the $2 million aggregate. Its logic is on ISO CG01 structure and Texas standard policy forms regulating liability limits. Question 23. Contrary to popular belief, commercial crime policies do not cover all theft scenarios. Mr. Singh owns an electronics retail store and recently suffered a loss after an employee manipulated accounts to embezzle funds over 18 months. Which form of coverage would best respond to this loss? A. Forgery or alteration coverage. B. Inside the premises. Theft of money and securities. C. Employee theft coverage. D. Computer fraud coverage. Answer. Correct answer. C. Employee theft coverage. Explanation. The loss is due to embezzlement, which falls under employee theft coverage in a commercial crime policy as a CR 021. This coverage protects against theft by employees as long as discovered during the policy period or extended discovery period. Texas insurers apply standard ISO forms and require internal controls to reduce exposure. Question 24. As a result of a coverage review, Mr. Delgado asks whether his commercial property policy covers flood damage. His building is in a low-lying coastal area and recently experienced a storm surge. Which of the following best describes the situation? A. Flood is automatically covered under special causes of loss form. B. Flood is excluded and must be insured separately under NFIP. C. Flood is covered under equipment breakdown endorsements. D. Flood damage is covered only if it affects personal property. Answer. Correct answer. B. Flood is excluded and must be insured separately under NFIP. Explanation. Flood is excluded under all standard ISO commercial property forms, including special causes of loss. CP 1030. In Texas, flood coverage must be purchased through the National Flood Insurance Program NFIP or a private insurer. This is reinforced by the Texas Department of Insurance and FEMA guidelines. Question 25. Based on the information, a large construction firm secured a surety bond for a government contract. After defaulting on a deadline, the project owner filed a claim against the bond. Which party is financially obligated to satisfy this claim? A. The principal. B. The obligee. C. The insurer. D. The surety. Answer. Correct answer. D. The surety. Explanation. In a surety bond, the surety guarantees the performance of the principal to the obligee. If the principal fails to perform, the surety pays the claim and may seek recovery from the principal. This three-party structure is recognized by the Texas Business and Commerce Code SS.101 and typical in public projects. Question 26. In a modern context of cyber operations, is Dupree's law firm carry CGL commercial property and crime coverage? Hacker infiltrates their system and exposes confidential client emails. Which policy will most likely respond? A. CGL under personal injury provisions. B. Crime policy under forgery endorsement. C. Commercial property under electronic data coverage. D. None, unless cyber liability policy is in place. Answer. Correct answer. D. None, unless a cyber liability policy is in place. Explanation. Standard CGL crime and property policies do not cover cyber breaches or data loss. Only a dedicated cyber liability policy will respond to data compromise, privacy violations, or regulatory penalties. Per ISO exclusions CG 21.6 in EDI interpretations, data is not considered tangible property for standard commercial coverage. Question 27. While it is true that commercial general liability provides broad protection, which of the following is typically excluded under coverage? A. Premises liability for slip and fall incidents. B. Completed operations for construction firms. C. Intentional injury caused by the insured. D. Bodily injury to third parties during product use. Answer. Correct answer. C. Intentional injury caused by the insured. Explanation. Coverage of a deal or policy excludes intentional acts. Liability coverage only applies to accidental occurrences. Intentional injury, even if motivated by frustration or retaliation, is excluded under ISO CG 01 and enforced under Texas Insurance Code SS.52, which restricts insuring illegal conduct. Question 20. In what ways can Texas agents legally share commissions? Mr. Holloway, a licensed property and casualty agent, wants to split commission with his unlicensed office assistant. Which option reflects compliance? A. Share commissions with any staff involved in processing paperwork. B. Only share with other licensed agents. C. Share with non-licensed individuals if under $500. D. Share freely if client signs consent. Answer. Correct answer. B. Only share with other licensed agents. Explanation. Texas Insurance Code SS.51 prohibits commission sharing with unlicensed persons. Only licensed agents may legally receive compensation based on the sale of insurance. Administrative staff may receive salaries or bonuses, but not commissions, even with client consent. Violations can result in license suspension or fines. Question 29. Through the lens of policy language, a business with commercial auto coverage experiences a loss where a borrowed vehicle, not owned or scheduled, causes property damage. Which endorsement must be in place for coverage? A. Drive other car endorsement. B. Hired and non-owned auto liability. C. Employee use endorsement. D. Motor Carrier Act endorsement. Answer. Correct answer. B. Hired and non-owned auto liability. Explanation. The hired and non-owned auto liability endorsement provides liability coverage for vehicles the insured doesn't own, such as rentals or employee-owned cars used for business. It fills critical gap in the business auto policy ISO 01. Texas regulations require this for broader commercial fleet operations. Question 30. To better understand valuation causes, Mr. Lewis insured his restaurant for $1 million with replacement cost coverage. The adjuster states depreciation won't apply, but payment depends on actual rebuilding. What does this indicate? A. The policy pays CV regardless of repairs. B. Replacement cost is only paid after repair or replacement is completed. C. Depreciation applies automatically to all losses. D. Replacement cost coverage eliminates coinsurance clauses. Answer. Correct answer. B. Replacement cost is only paid after repair or replacement is completed. Explanation. Under replacement cost provisions as OCP 010, insurers pay a CV first, then the difference after repairs are completed. This ensures funds are used to restore the property and discourages cashing out without rebuilding. Texas follows this principle under Tick SS.54, clarifying post-loss settlement procedures.